It's an election. Oh, man. It's an election day rally right now. Their hands down, up 169 points. We've got Todd Schoenberger, the Black Bay Group Managing Principal. Gary Kaltbaum, Capital Management President, joins us now. Gary, all right, you're worried about 2013 no matter who wins. You don't even care who wins today. Why?
Well, I think the market's going to do what it wants to do into the end of the year. We have seasonal strength going into it. You have a Fed printing $40 billion a month. But typically the year after a presidential election, not very good. And earnings are blah. Sales growth is blah. And I think that's going to catch up in 2013.
Okay, but government spending, Todd, that's 20% of GDP. I mean, at this point, if that gets scaled back, which you believe it will,
right,
no matter who wins, and then you've got lackluster earnings news coming out of a lot of these companies this quarter, that's going to be a market negative.
Second half of next year will be, Cheryl. Look, the markets are rallying right now because we're going to have, hopefully, certainty, because by tonight we will know who's going to occupy the White House for the next 4 years. That's why stocks are rallying. It's not an Obama rally, Romney rally. Both guys are going to see the markets actually go up right away. Next year is going to be what's in question. Look, you have an Obama presidency right now. He loves to promote with the stimulus, with leaning on the Fed to do things with accommodation. We had multiple rounds of quantitative easing. That's great for the stock market. Romney, though, is probably going to bring that back.
But Gary, you say that a lot of times we see these post-election drops in the market. How do you figure? Where do you get that from?
Well, I don't know. I think this is, by the way, I think this is an Obama rally. I think the market's predicting he's going to win. Just remember, under Obama, you have this Fed printing, trillions of dollars and, just spending, left and right. So I think that's what's going on here. But as far as the rest of the year, we are now in seasonal strength, November, December. So I don't think we can drop right here. And I think the most important part about today, whether you think there's chicanery going on or not, is that 13,000 on the Dow held and also 1,400 on the S&P. And as long as those areas stay above those, as long as the market stays above those levels, good news. And also financials are starting to reassert themselves again, which is nothing but good news.
I want to show, look at this. Now look at this. This is a 20-year chart, guys, of the S&P 500. And this shows how these markets perform after each and every election. If you go back, look back to 1993, 1997. These are when we had strong markets no matter what. We had
right,
Republicans, we had Democrats. It wasn't about the presidency time.
Well, Obama actually, the one thing about Obama, though, is that if you look at stock market performance, he's actually enjoying the 5th best performance of all time for a first-term president. It doesn't matter what his party is. You can say it's him, you can say it's a Fed, whatever. Going forward, you have to suggest that if he is going to be reelected, that's going to be good for stocks. The issue, though, is that you have this government is so margined right now, you have to assume that we will hit a brick wall. There's not one person on Wall Street right now that thinks that this rally today is anything to do with President Obama, because it's not.
Real quick, I want to let our viewers know the video that we just showed you was Governor Romney and his running mate Paul Ryan at this point going into, where, Lou, were they going? Cleveland. All right, Ohio. There you go, guys. We were just saying that it's going to be all about Ohio. There you go. I want to let our viewers know
and
that.
Look at him working. He's not playing pickup basketball right now.
All right, let me go back to something else, Gary K. right now, because at the end of the day, this country has a lot more to deal with after today. The fiscal clip. We're talking about taxes, regulations, everything is going to be on the table. And if we do have President Obama reelected, that means it's going to be up to Congress. But at this point, we don't think is going to change. The dynamics look like they're going to most likely be the same. What do you say to that? How do you deal with that as an investor?
Well, look, debt eventually implodes. They are taunting markets with the $16 trillion. If nothing's done, we're going to be in the 20s in the next 4 years. And I don't know what day we wake up and the market, bites back. Just remember, the housing bubble took 2 or 3 years to happen before that imploded. And I just think they're making a huge mistake here, and they're glossing over it by the Fed printing money to cover the debt. And the bottom line for me is we will wake up one day at what point, and the markets are going to crater in a very big way because we can't cover it. You got to think about this. The next 6 years of taxpayer dollars have already been spent because of this government. And if that doesn't change and if they don't get on top of it soon, it's just a matter of time.
Todd Schoenberger, Gary Kaltbaum. Gentlemen, I'm so sorry I'm out of time. Thanks to both of you. Great discussion. Markets looking good.